I think the short answer is yes. When the rest of the business stabilizes and joins the enterprise compute segment and returns to growth mode, the profitability growth could be quite dramatic.
You're right. I would say I am not as big a fan of ON Semiconductor. Hey everyone, welcome back to Chipstock Investor. Let's talk about Monolithic Power Systems.
Ticker symbol MPWR. Yes, we lured you in with clickbait, 10-for-1 stock split at well over $800 a share. It hasn't split its stock since the IPO in 2004. Yes, this could be the next semiconductor business to announce a stock split. And yes, we also think there are some notable similarities with Nvidia. Let's talk about what that is. But first, I would like to make an admission. I picked the wrong power semiconductor stock. So my top pick in this department was ON Semiconductor, ticker symbol ON. And year to date, and over the last year, Monolithic Power has been far and away the best power chip stock around. You can see up 64% in the last 12 months, and year to date, up nearly 40%. ON Semi, not doing so hot right at the moment. We're not giving up on the business. I still think there's a ton of value to be had there. But over the long term, you can see Monolithic Power far and away the best performer among top power stocks. Just for sake of comparison, have ON Semi and Texas Instruments displayed here because it's two businesses that we've talked about recently. But let's talk about why Monolithic Power actually stands out as the Nvidia of power chip stocks, especially as we enter this new era of rapid technological advancement brought on by accelerated computing.
Before we move on, make sure you hit the subscribe button and have notifications enabled for the channel. A free and easy way to support us here at Chipstock Investor, just hitting that subscribe button.
Casey, tell us about the market segmentation of the semiconductor industry.
We have the semiconductor industry broken up into 4 different segments. AI infrastructure at the top. That's the current cycle trend that we're in max growth mode for this part of the industry. AI infrastructure, when you think about that segment, you can insert Nvidia into that. The consumer market, PC, smartphone, and then the cloud and enterprise parts of the semiconductor industry, those are at the beginning of a new growth cycle, just starting to begin. The last bottom was in autumn of 2023 for consumer, and then early this year for cloud and enterprise. Now, we'll focus on this auto and industrial portion of the market segmentation because that's where we lump power chip semiconductors. The last peak was in late 2023, and based on all indications, it's currently bottoming.
So it begs the question then, given that we've been in an auto and industrial downturn for the better part of a year now, how is Monolithic Power up 64% in the last 12 months?
Let's take it back to our semiconductor industry flowchart. Monolithic Power is a fabless chip designer. A lot of other power chip companies that we'll show to you on the next slide are in that integrated device manufacturer section on the left side of the chart, but Monolithic, fabless.
And these companies, Monolithic Power itself, calls out as competitors. With just a couple of exceptions, Power Integrations and Semtech, which are very small businesses, Monolithic Power is the only fabless chip designer in the power semiconductor space. That means they outsource all of their manufacturing to a third-party manufacturer, and they focus only on the engineering, the design of the chips. That's why we often call fabless chip designers when we talked about our semiconductor industry flow. Late last year, did a deep dive into the industry. Fabless companies you can think of as the big engineering firms of the semiconductor world. Because they don't have much in the way of physical supply chain infrastructure owned in-house, the manufacturing plants, the fabs, the barriers to entry in this part of the market can be highly variable. So if we go back to the semi-industry flow, this is why IP and patents are so important for a company like Monolithic Power. It's important that they continuously pour money into the right engineering projects that can be patented and build on past IP and help sustain growth. We called out this chart last year for Monolithic Power. You can see most of their facilities around the world are just research and development engineering. They're manufacturing partners in China, South Korea, Taiwan, a bit in Malaysia. So Monolithic Power is in this game of design, and they have to be exceptionally good at that to build any sort of competitive barrier to entry, just like NVIDIA had to do with GPUs and accelerated computing.
Back in 2015, you can see that Monolithic Power was a consumer-based semiconductor company. But as the years have gone by, they have been diversifying more into other segments. You can see that storage and computing has become a larger segment, enterprise data, automotive, all of these things are making this company well-diversified play in the semiconductor industry, which draws another comparison to NVIDIA. If you remember correctly, NVIDIA was just a, let's say, gaming computer designer of GPUs. Look where we are now.
And this is an important differentiator for Monolithic Power versus all of its competitors. We said at the outset, typically power chips, we lump into the auto and industrial segment, but because of the diversification work that Monolithic Power has done, actually its power chips find application across the entire supply chain, including AI infrastructure or accelerated computing data center infrastructure. We're going to come back to that. But Casey, let's talk a little bit about how Monolithic Power makes money and then has been able to sustain growth for such a long time in what is obviously a very competitive part of the market. And not only competitive, but also by and large, a very commoditized part of the semiconductor industry. Power chips, not all that special. Pretty much every single electronic device, everything from an iron, a blow dryer, a microwave, an appliance, all the way to really advanced data centers have power chips. Not much special going on. What's Monolithic Power doing?
Now, look at their research and development section of their annual report. Monolithic Power said they focus in 3 areas specifically: systems architecture, circuit design and implementation, and process technologies. Now, draw your attention down to the bottom of this slide. They say our growth is fueled by our customers' need for our power-efficient solutions. Our products are principally positioned to achieve lower power loss and enable significant reductions in circuit board space. In addition, the life cycles of our products are typically over 10 years, reducing the manufacturing needs and associated carbon emissions associated with the production and replacement of products. So what does that mean?
As the name Monolithic Power suggests, the company was founded by actually still current CEO Michael Singh some 30 years ago with the goal of shrinking down a power chip onto a single monolithic die, a chip, just a single chip, versus having all of these disparate parts that split electrical current down to the exact amount of electricity needed to run a device. He envisioned taking all of the different parts that make up the circuitry of an electronic device and shrinking it onto just that single chipboard, thus reducing the space and the performance of Monolithic Power's semiconductors. Now, this slide is a bit more recent. Monolithic Power doesn't just do monolithic dies anymore, monolithic chips. They have been, as Casey mentioned, diversifying into more technologically advanced markets, including enterprise compute, data centers. So this slide is actually referring specifically to the data center, which, as you know, from NVIDIA, needs much, much bigger chips. So when you're designing a whole circuit board for an accelerated compute application, most of the space is going to the GPU and other parts like maybe the memory, high bandwidth memory, HBM3E, those stacks of DRAM chips that get lined up alongside of the GPU. Those circuit boards are running out of space. And so Monolithic Power's multi-decade focus on shrinking down the electrical circuitry that delivers just the right power to each part of the circuit board is helping them win market share.
If you want to think about this in a more traditional illustration, you can think about how engines in a combustible engine car have changed over the years. In the beginning, engines were very, very large, but now research and development has allowed engines to get smaller while still retaining the same or more power.
You can think of maybe an American muscle car back in the 60s and 70s with a big V8 engine block. Auto manufacturers can get the same or more power now from an inline four. Maybe they strap a turbocharger to it, and you get an ultra lightweight machine cranking out lots of power that many of those muscle cars would have only dreamed of having 40, 50 years ago. Monolithic Power kind of doing the same thing, shrinking down the electrical circuitry to deliver power. And that's been a winning strategy across all sorts of applications, because why not? If you can shrink down the size of the chip and get the same or better performance, why not? It means a smaller device. And it probably also over time means a cheaper device as well. Smaller chips, more simple to make chips generally means less cost of goods for the end device manufacturer. So again, another reason Monolithic Power has been winning in lots of new markets as they expand their engineering know-how. And as they've expanded, you see thousands of products, but this company very squarely focused on power management. So some of the other power chip companies mentioned earlier, some of Monolithic Power's competitors, some pretty recognizable names here, but many of these companies have diversified outside of power chips. That's another beautiful thing about Monolithic Power. Like NVIDIA is squarely focused on accelerated computing, Monolithic Power is squarely focusing its engineering teams on electrical performance. So that brings us to the biggest new growth driver for Monolithic Power, and that's enterprise data.
Yeah, back in 2020, you can see the enterprise data only made up 8.6% of Monolithic Power's total revenue. But fast forward to just last quarter, this year, it's up to nearly 33% and growing at a 61% CAGR.
There are other growth markets that Monolithic Power is enjoying as well. You can see silicon carbide, one of those new markets starting in 2019. Silicon carbide finding lots of application in electric vehicles. When we've covered Monolithic Power in the past, including last summer, this was the segment that we focused on, but that's the segment that has been in a down cycle now for the better part of a year, while enterprise data, accelerated compute, has picked up the pace. Automotive still the largest serviceable addressable market for Monolithic Power as of 2023, but you can see cloud computing, enterprise computing, accelerated compute very quickly catching up. And this is as of 2023. This market is getting bigger for Monolithic in 2024 at $4 billion last year. Accelerated compute, enterprise compute, probably on path to become tied with automotive, if not surpass automotive within the next few years. You can see that show up in the overall revenue expectation for 2024.
Monolithic Power has had a history of above market performance in downturns. And you can see in 2024, the Wall Street estimate is over $2 billion in revenue in the midst of a downturn in their largest segment.
And right there is why they're outperforming. Enterprise data has more than tripled year over year. Last year, about $47 million in enterprise data revenue in Q1. Fast forward to Q1 2024, just a skosh under $150 million, more than offsetting the sizable declines in all other segments. Now, it would be fantastic if Monolithic Power returned to growth in these other segments. And it sounds like at the very least, most of these other segments, automotive, communications, even the older consumer business, CEO Michael Singh and the management team are cautiously optimistic about the second half of this year. That's commentary that is being repeated over and over again by other management teams in the semiconductor industry that play in these same markets. Enterprise data centers, AI, accelerated compute, That is the driving force behind this company right now. I mentioned before, this used to be just simple electronic circuitry that delivered the right amount of power to different parts of the circuit board, to the different chips sitting on the circuit board, like, say, the CPU, the GPU, the memory, so on and so forth. But as these systems have rapidly become much more advanced, Monolithic Power is actually finding all sorts of new types of equipment within the data center that also need power, including the racks themselves that the servers sit on in the data center, as well as cooling equipment. When we recently reviewed Vertiv Holdings, VRT, a company a lot of investors are excited about because they make those pieces of cooling equipment for those really big, really advanced NVIDIA chips. Funny thing about cooling equipment,
It also needs power.
these really big increases in enterprise compute, specifically from AI, much more complex server architecture, and then also all of the new equipment needed on top of the servers themselves. You can see in the orange bars there on the right, just the AI segment within enterprise data expected to surpass 3 billion in serviceable addressable market for Monolithic Power within the next couple of years.
Nick, you mentioned this earlier regarding placing these accelerated compute CPUs onto a circuit board. You can see how much real estate those take up. And then also with memory, most of the circuit board is taken up by those things. In purple, in red, in blue, you can see some of the products that Monolithic Power provides to the circuit board. All of those shrunk down so that they can fit and provide the needed power systems for each semiconductor.
We've dropped in a picture here from NVIDIA's new Blackwell architecture, and you can see just how big these GPUs and stacks of memory chips are. If Monolithic Power comes to a customer like NVIDIA with these really small fuses and electrical circuitry and promises we're going to take up minimal real estate on your circuit board, pretty good chance that they might land a couple of sales. And this trend is really only just continuing now that all of these new accelerated compute server racks and the whole data center construction itself needs to be rewritten to accommodate these really powerful AI chip systems.
You can see that Monolithic Power services the rack itself in the data center. All of that needs power, as well as a battery management system, which provides backup power to those data centers, and then the cooling systems themselves. All of this adds up to fantastic financials for Monolithic Power. Earnings per share are actually growing at a faster rate than revenue. You can see 477% since 2016. Wall Street estimates expect $13.26 non-GAAP earnings per share, up from just under $12 last year.
So there was a pretty good telltale sign that Singh and the management team were feeling pretty confident in their trajectory last autumn when they announced a 640 million share buyback plan. Now, for a company of this size, that's not a massive share buyback, but in the midst of a pretty sizable and prolonged downturn, which we'll show you here in just a moment, that's a pretty solid indicator of confidence in the underlying business. So before this announcement came out, we did a deep dive into Monolithic Power, specifically surrounding their automotive business last August. We did a reverse fair value estimate. And at the time, the stock was trading for about $500 a share, in the $500 per share range. We said that was a pretty easy hurdle for them to clear. And it's not like they cleared that hurdle. Again, we're in a downturn. Earnings have actually shrunk year over year since then. Now we're sitting at about $830 per share. The bar's been raised a bit, right, Casey?
Yeah, absolutely. To get to this fair value of $830 per share, we did a reverse DCF. And let's just walk through these numbers here. Earnings per share GAAP estimate of $9.74 or $13.19 adjusted for the current year. This is a blend of GAAP and adjusted earnings per share. Now, that would require earnings per share growth of 25% for 2 years through 2027 and an 8% terminal growth rate thereafter with a 10% discount rate. that would bring us to about that $830 per share. Now, do we think that this earnings per share growth of 25% over the next couple of years is reasonable?
Well, I think it's reasonable. Maybe just going back to last August, I thought this hurdle of about 11% growth through 2025 was reasonable, even though they were hitting a downturn. The averages implied by this reverse DCF did not make Monolithic Power as overvalued as it appears on the surface. And the reason for that is, remember, this is a fabless business. They don't have to worry about building manufacturing capacity. Their third-party contractors have to worry about that. All Monolithic Power has to do is design great chips, find new markets and new growth outlets for those power chips. And yes, you can see the earnings per share growth rate tanking for the last year and a quarter. But because this is a cyclical industry, but Monolithic Power offloads one of the more expensive parts of that cyclicality, the manufacturing, we can get some really incredibly wild increases in quarterly earnings per share. Historically, as Monolithic Power has emerged from these down cycles, you can see sometimes very strong double-digit or sometimes triple-digit, over 100% year-over-year increases in quarterly earnings growth rates. Are we headed for that again, especially after Monolithic Power's profitability has been suppressed now for a year and a quarter by a particularly bad downturn driven by automotive, consumer electronics, industrial? Yeah, I think the short answer is yes. When the rest of the business stabilizes and joins the enterprise compute segment and returns to growth mode, the profitability growth could be quite dramatic. And so this implied expectation for 25% earnings growth through 2027 might not be as high a hurdle as it appears. So we've been discussing this a lot because I picked onsemi. I still think there's great value in this business. This was my pick, though. You're not as big a fan of onsemi as I am. What are your thoughts on this, Casey? Is onsemi going to catch up here, or is Monolithic Power still a better bet over the long term?
You're right. I am not as big a fan of Semiconductor. I think you've convinced me that it's a very solid business, and I do like the management team. Their focus on being vertically integrated as an IDM in the semiconductor industry has me a little less excited about it than, I would say, another fabless designer like Monolithic Power. The focus also on automotive and silicon carbide has me questioning whether or not that would be the best long-term play in the power department. Monolithic Power definitely seems like it has more opportunity to be diversified in a good way in the semiconductor industry.
And that's a really fair point. I'm going to chalk this up to familiarity bias for myself. onsemi's management team used to be in charge of Cypress Semiconductor business that we used to own before it got acquired by Infineon back in 2020. onsemi is a business that we've been invested before in the past. Monolithic Power, not a business that we've ever been invested in. We talk all the time about how the semiconductor industry overall has gotten really expensive to both design and manufacture chips. This has been Intel's biggest Achilles heel in the last few years as they tried to orchestrate some sort of recovery. They just don't have enough capital to do both leading edge, cutting edge design work, engineering work, and manufacturing. So Monolithic Power, strictly focused on just the engineering, means they can focus all their capital in just that one direction, kind of like Nvidia has done with accelerated compute and help them leapfrog its competitors like Intel. Monolithic Power, it appears as kind of on some sort of crash course that it will win with the traditionally IDM part of the power chip and industrial chip market. So I have to agree with you, Casey. I don't think we're going to sell onsemi. I think we've come to that conclusion. It's cheap. We still see value there, but we're looking at maybe finally, after looking at this business many times over the course of the last 4 years, allocating some money to Monolithic Power for the long term.
I agree. Let's do it. Thanks everybody for watching this episode of Chipstock Investor on Monolithic Power. You may have noticed that we use some charts and analysis from our friends at finchat.io. In the link below, you can get 15% off a membership with them. Great tool to use in your personal analysis. And make sure, once again, you hit that subscribe button. Check out our Semiconductor Insider membership below that gets you access to Discord, as well as all the video notes and show notes that we provide, and live events usually once a month. So check that out below. If you're still watching, make sure you check out this video on semiconductor manufacturing equipment. See you soon at Chipstock Investor.